Today, my guest is JP Albano. He is a corporate computer sales uh, professional, and he's turned multifamily real estate investor. And his company is Significant, and they are the people first multifamily real estate company. And in just a minute, we're going to speak with JP about finding multifamily value where others cannot see it. But first, a quick reminder, if you like the show, CREPN Radio, please let us know. You can like, you can share, you can subscribe, and as always, you can leave a comment. We love to hear from our listeners. Also, if you'd like to see how handsome our guests are, be sure to check out our YouTube channel, and you can find this at Commercial Real Estate Pro Network. With that, I want to welcome my guest, JP. Welcome to CREPN Radio.
Darren, thank you so much for having me. I'm excited to be here and grateful to be on the show.
Well, I'm so glad you could join us today. I've been looking forward to our talk here. And but before we jump into our topic, if you could take a minute and share with the listeners a little bit about your background.
Sure, be glad to. So my background is really technical. I used to be an engineer, computer systems engineer for many years, and never really thought I'd get into sales. When one day, a worker of mine was like, you'd be really good at sales, and I really didn't believe him. And then as fate had happened, I had lost my job as an engineer and worked for a computer reseller as also an engineer. And then there was an opportunity to become a salesperson. So I've been doing IT sales for probably about 6 or 7 years now, selling to corporate customers. And while it's a great day job, realized a long time ago that there's got to be a better way of generating income, specifically passive income, where I'm not selling hard drives for a living, and led me down a path of discovering multifamily as a way of building a business and building generational wealth for my family and for my investors that I work with. It's where I am today.
Got it. So, and how long have you been investing in real estate?
Been in real estate business for about a little over 2 years now, 2.5 years. I've almost lost track of time. I've pretty much been focused on real estate for, that's redundant. Use the first answer. Yeah.
Yep, a couple of years there. All right. And currently, are you exclusively multifamily, or did you start in single family? Or
Yep, great question. So started out, I learned or realized as I was getting into this business, because in real estate there's a variety of ways one could make a living, right? There's a whole variety of places. In my early days, I was spending a lot of time researching, absorbing information, reading books, listening to podcasts. I remember being really interested in notes investing. I thought that was a really interesting way of getting involved in real estate, but couldn't find anybody local to help mentor me in the process. I also stumbled upon the great guys over at Bigger Pockets, and I kind of share the story a lot. But the Bigger Pockets model, I found their burst strategy, right? Where you buy a single family house or a duplex, you rehab it, you refinance the money out, and you rent it out. You do this strategy over and over and over again. And I remember vividly sitting on my couch, and I was reading this roadmap for success. And it was this burst strategy over and over and over again. And then at the end of it, there was a picture of an apartment. I said to myself, why don't I just go for the apartment now rather than later? So I started out knowing that I wanted to get into multifamily. And as I went down the path at the time, there was lesser known resources available for getting the education, getting the experience, getting the team, and really getting immersed. And so I found a partner, a friend of mine, and honestly, I floundered around for a couple of months, and it was really frustrating. I picked a market, spent a lot of time researching how to pick a market, reading some books. Dave Lindahl's book, Emerging Markets, was for me, was a great read. I was so excited to read it that I read it from the cover to front to the back in one sitting, and was really juiced up to go find a market. And what Dave Lindahl conveniently left out was how to actually do that. And then I later found out that he was a seller of real estate courses, which is fine. But for me, it really inspired me to get into multifamily, faster and better than ever. And I like I said, I stumbled a little bit, and my partner at the time had dragged me into single family world. I still rue the day that's happened because I've gone through a lot of learning opportunities in that space, and it constantly reminds me. I'm not sure if I'll just keep it as a reminder for painful lessons sort of thing, but I did get sucked into single family rental stuff out of state. It did provide some good experience for me, but if nothing else, it really reinforced my excitement for the value of what multifamily represents.
Well, the good news is those lessons are never forgotten, right? That's the way I like to look at it anyway.
That's right.
So let's talk a little bit then. So you're in multifamily now, and how many units are you in now?
I'm blessed and thankful to kind of throw out there that I almost lost track. And I don't say that like I'm throwing caution in the wind here. I've been so focused on really ramping up our real estate business and going after these larger properties that I've kind of lost focus of where I've came from. So to answer your question, I think the last count was about 236-ish units across 5 properties, which is really incredible, because I remember getting started. The idea of getting some smallish property, 20, 30 units, was half foreign and half exciting. And then they come, and then there's so much work getting to the point where you acquire the property. Then there's all this work of doing the repositioning. And before you know it, you're looking at the next one. You try to balance all these things at the same time. It's exciting, it's fun, it's hard, but it's good stuff. So to answer your question, I think a little under 240 units presently.
That's awesome.
Yeah.
And how long has it been since you acquired the first multifamily, the first of the 5?
First one was a 42 unit in Houston, Texas. That I got involved as a GP, kind of a GP sponsor back in about 2 years ago, maybe like 6 months after I kind of got into this multifamily gig. And then about almost a year later, I syndicated my first deal with 3 other partners, and that was a 28 unit in Houston, Texas. We still have that today, and there's some interesting learning lessons along that one. All good stuff, but that one was one of those things where you go into something with an understanding or an expectation of it operating or running one way, and it runs completely different, and you either adapt or you don't, sort of thing. But the first one was probably about a year and a half ago ish now.
Got it. So you're kind of screwing up my theory or at least the theory that I've heard, is that all the good deals are gone.
Sorry.
Where are you? What are you doing where are you finding? What are you looking for? What do you see that others don't?
Great question. Yeah, and I like to call out one of our most recent deals that we closed in October of last year, of 2019. It was a deal that we got wind of probably about 3 or 4 months prior. It took a kind of a while to court the seller and strike a deal, but it was. I'm still amazed at this deal today. It's essentially a 60-unit deal right outside of the airport in Atlanta. So it's about 25 minutes from where I live. I relocated from New Jersey about 6 months ago or so. So 60 units approximately, right by the airport. It's when I got there, it was almost hard to believe the story here. It was a mom and pop, a pop-owned place for 60 years. Original owner originally set it up as housing for temporary or short-term housing for men. Men that had maybe fallen on hard times, maybe they were let out of jail, whatever. It was called Keller Apartments at the time. And they've been running it for 60 years with 0 systems. Everything was written on paper. And their average rents going in were about $100 a week. This is in a market where a 1-bedroom, that's $400 a month, right? So average rents for a 1-bedroom apartment in that submarket were about $900. So a huge delta between what they're collecting and what the market kind of commands. And furthermore, the competing properties, number one, they were actual apartments with bedrooms and kitchens. This property were essentially small studios, 200 to 300 square feet, no kitchen, but they have private bathrooms. And there was, all those properties were 100% occupied. So it told me when I was doing my research, clearly there's a demand for housing here, enough so that people are willing to pay $800 or $900 for a regular one-bedroom apartments. They're all filled up, so there's nowhere for them to go. The existing property, because we had no real financials to go off of, everything was kind of made up on our part. It was hard for people to see the opportunity there, because when you look at this property, they were storing trash underneath the basements or the slabs of these buildings. There were some units that have about 14 units that were completely offline, filled with other people's trash for years, it turns out. So they were running it very poorly. They were leaving a lot of money on the table. And when I went there, I was putting all these pieces together. A market with high demand, units that are offline, no systems. Hell, if these people can do it for 60 years, there's no reason why I can't do it, right? That was my approach.
No, that's, I mean, everything you're saying is like, holy moly. I mean, 14 units that are vacant, you're half the market rent.
Yeah.
And, it sounds like you've got some tired owners that are ready to move on.
That's exactly it. Yeah. The owner was 92 years old. Mr. Keller he's still alive as far as I can tell. They were done. They were ready to retire. I don't know where you retired at 92, but God bless them.
Yeah, no, that's good. At 92, you're gonna retire. That's good. Well, but even just so, walk back. You said the 3 months before that you first ran across this thing. What was the initial interaction, or were you guys reaching out to the owner, or did a broker bring this to you, or how did you?
Yeah,
Okay.
it was a great question. So it was a broker provided deal. Broker had been reaching out. Turns out the broker was less of a multifamily broker and more of a land broker. But he, I guess, because of where the land is located near the airport, there it's valuable, and he had been courting the sellers for years, apparently, to see if they'd be willing to sell, and he caught them at the right time and offered the deal. It was rough. It's much better now, but it was, if you didn't know what you were looking at, you walk in immediately and you make a snap decision like this place is a dump. It's not necessarily D-class. The buildings are D-class because they are in rough shape. We've since cleaned them up. But this place is almost in this little oasis. So to kind of go back to what I was saying before, this is it's located on a dead end, essentially in an industrial zone. So you come off the highway, you're not driving through a residential neighborhood, you come off the highway or from Cloverleaf, and you drive into this down the street, and then suddenly you're greeted by a number of 13 buildings of various sizes. There's a brick building, there's old 60s and 40s built single-family homes that were kind of converted into multifamily. There were these trailers that were set up. We call them barracks. So it's this whole smorgasbord of properties there, all by itself. Right across the street was a railroad track, and every once in a while a train would roll by. So it was pretty rough, and unless you kind of had the picture of what was going on in the submarket there, with where the rents are, how they're operating the place, it was very easy to become overwhelmed and be like, I want nothing to do with this. And I ran into that occasionally with some investors as we were trying to bring people in to help raise money for the deal.
So I'm kind of curious, because I mean, what you're painting the picture of is something that's clearly something that I think most people would drive right past, kind of a.
Correct.
Were you able to see any of the opportunity or the potential before you saw the numbers?
Before I saw the numbers, well, like most of the things that I do, and I think probably a lot of people in our space, the business aspect of these deals, because that's what we're buying, right? We're buying a business. That needs to work. And so that really started with understanding, okay, here's how they're operating it today. Here's what we understand their expenses to be. Again, we had very little to go by other than a couple of utility bills and a couple other things. So we had to guess what that would look like and guess what their vacancy was. I think when I underwrote the property, I underwrote a 23 or 25% vacancy in the property, because I didn't understand, I didn't know how many people would be coming in and out of the homes there, right? Because they are weekly rent, they're paid as weekly rentals. They have leases and stuff, but they pay weekly. So there was a bit of uncertainty there. But you try to put a business model together, and what we found was there was large potential there. Now, we were very conservative with where we thought we can take the existing rents and where we might be able to move them over the period of a year. But what we found out was there's an absolute market for that type of housing. We have been doing zero advertising. Everything is complete word of mouth, and we have a waiting list. We're 100% occupied. We found out we have two people there, at least one person there. They've been living there for 39 years.
Wow.
Exactly.
Wow.
So, to answer your question, we tried to assemble, almost like a detective, as much of as a complete picture as we can, to see if there's something there. And what we can tell was there was something there. If nothing else, the land would be valuable at some point in time, just given all the growth that's going on in Atlanta, or the Atlanta market.
So it definitely sounds like it had just tons of upside.
Yes.
Starting with the mismanagement, the
operations of it all. Yeah.
Yeah, I mean, and that to me is like, if there's anything that's kind of a home run as far as an opportunity, it is finding that just basically an exhausted, tired, ready to move on owner that hasn't kept up with market or the market as far as rents goes.
Yes.
The fact that you got 14 units, almost 25% of the property that's not being rented, a huge opportunity there. Were you able to purchase the property based on actuals, or how did you come up with a number that made sense based on what you described?
Great question. And it's a very interesting, I think, look at how we did the deal. So a couple of elements here. I'll paint the picture for you. In that submarket, this is Hapeville in Atlanta here. In Hapeville, the average submarket price per unit cost basis is about $64,000 a unit. That's what recent sales were. But these are normal apartments, right? Ones that have functioning kitchens, all that stuff. We were able to acquire the property at about $17,000 per door.
Wow.
Which penciled out to be about $900,000, which penciled out to be the deal we struck with the owner was seller financing. So we came up with $400,000 cash. We bought the property. They held the note for 18 months at 0%.
Wow.
So
0%, huh?
0%. They really wanted dollars. So we gave them 400,000 of them. They're holding the note of $500,000 for the next less than 18 months now. And we bought it at $17,000 a door. So when our underwriting, we were trying to get to an exit in 2 or 3 years of about, where were we at? We were at 25,000 a door. That's not a guess, but it's an educated guess, really based on half of what the market conditions exist today, but then also, how do you value a property that operates like this? So there's a little bit of unknownness there, but the reality is that the property produces a lot of cash flow. So there's always that.
No, that's just an incredible deal. And again, one, to find the owner that's ready to move on. And I think, I've thought of this, and it hasn't said it as much lately, but I mean, I think really what's critical, what I believe in a deal, is that you have to have a willing seller.
Agreed.
If you have somebody that's believes that they've got the Taj Mahal and it's really a dump, but they want a Taj Mahal price, it's probably not, I'm not interested.
Darren, for a while until we acquired it, the nickname of that property was called Cash Mahal.
Cash Mahal. No, that's funny. But but just having that kind of or having that ability to recognize when there is a willing seller, and getting to the numbers and making it all work. Um, that's an incredible thing. And in the note you have the 500,000 0% interest. Who How did they come to that agreement? Was it they just needed the cash, and that was basically? It sounds like they were desperate in the
They were
sense
getting
of.
desperate. Yeah, what happened was there. I mean, there's a lot more to the story, right?
Okay.
There's a billboard on the property that hasn't been used for many years. They've been uh, leaving money on the table by not enforcing the 20-year contract that they have with the leasing the billboard leasing company. And there was a number of some deficiencies clearly with code violations. So we were able to kind of paint, this has been dragging on for a long period of time. They were getting anxious, extended the contract once or twice. They really wanted to conclude the transaction and kind of move on. And then when we came back to them with a number of different issues that we were seeing with the town, with code enforcement, with the billboard that we're running into problems with, we painted this kind of dire picture that this is going to be a problem. We're going to walk away. And I guess the property had been listed for sale for a little bit of time. So they were just growing impatient. And then we were having a problem actually raising the money for the deal, because originally we had to raise, I think, 800 grand or so, 900 grand. So we were able to kind of offer, we were able to offer this idea of, hey, we can give you, a good chunk of cash right now. You hold the note for 0% for 18 months. And they took it. Now, granted, this isn't a terribly sophisticated owner seller, but given their situation and their circumstance, that was a deal that they felt good about. So they took it.
No, that's congrats to you and your team on that. That's amazing. So we've talked about, basically, it sounds like the key to this thing was just the mismanagement and just the tired owner there. When you're looking, or back up, how many deals had you looked at prior to this one? You mentioned a little bit earlier that kind of the momentum that's taken hold, and the ability, or just your kind of, you've been doing so many deals that the numbers, you're having a hard time keeping track of it because of just the opportunities that continue to present themselves and you're getting involved in. Can you
Yes.
describe kind of the underwriting how much underwriting you've been doing, and that process, and the benefit of that, and how that kind of prepared you for recognizing these opportunities that are presented to you?
Yeah, great question. So, going through that's the story's changed a little bit even in the last couple of weeks. The amount of underwriting that I would say I do on average in a week has even increased to double or triple to what I was doing 3 months ago or so. I think a lot of it has to do with time of year sort of thing, right? As we approach Thanksgiving and Christmas time, naturally things slow down a little bit. So the deals that are coming to market, they attrition a little bit. And then as the new year pops up, the amount of deals I see come across my desk, it's almost about 3 or 4 a day, out of which I'll underwrite maybe 2 of those a day, maybe sometimes 3, depends on what's going on. That's as of very recently. Back when we were looking at this deal, I was probably looking at, probably 1 or 2 deals a week. So the underwriting amounts were a lot slower. Also at that time, my selection criteria was a little different. Now, for 2020, my partners and I, we were expanding our markets to about 11 different markets, whereas before I was pretty much just focusing on 2 markets, which was in Georgia. Getting to that point, I probably had underwritten, maybe 50 or 100 deals or so, putting offers on probably about 10 to 15 of them, with varying degrees of success, making it to best and final, not getting any response, getting some kind of response, everything in between.
Well, and talk a little bit about just kind of the emotional roller coaster there. I think that, from a standpoint of investing the time, and if you're putting a letter of intent, and whether you're making it to the final or you're not hearing back, I think there's enough in there that people a lot of times will get discouraged because they're not having immediate success.
That's a great point. And I think that's a brilliant point, actually, Darren. there is a lot of emotion that goes into this, absolutely. And it's, I would say, I think back to the first offer that I put out when I first got started. It was a portfolio of 3 properties. I don't know, $24 million deal. You know, at the time I remember being so nervous hitting submit on my email, right? Going back over the LOI 6 different times, fixing mistakes. And I realized back that I had this much chance, 0% chance of actually getting the deal, but it was the, I don't know, the everything that I had been leading up to, right? Understanding how to underwrite properties and getting to the point where actually submitting offers. And it was less about winning the deal than actually going through the process and feeling like, okay, I'm doing it, I'm making offers now, right? And what I've noticed is it does, for me at least, the process of putting out LOIs has become more detached, right? From an emotional standpoint. I've also learned to appreciate the value of having options. And you know, for anyone that's new in this game, in this business, you know, everyone's looking for their first deal, right? Or a deal to do. And you almost become desperate-ish, if that even makes sense, right? You become desperate because you want to get something. And you put your offer out there, and you're nervous about maybe putting it together. Get it out there. You're waiting to hear back, and because you have nothing else going on in your pipeline, you're almost dependent on the success of that deal, right? But I tell you what the antidote is. The antidote is having more deals to work on and more deals to put offers on. And if you're doing that, you become, what I found, is less dependent on the success of that one deal and less emotionally attached to it.
No, that's so true. I mean, nothing screams desperation more than, you don't have any other options. Like you said, if you know you have a list of options or opportunities, and maybe you've got 3 or 4 LOIs out, and you just need one to be accepted. That's probably the time when you're going to get all 4.
Yeah, of
Versus
course,
the
yes.
you know versus the time when you're just so desperate and you only got the one and you don't get it, and you put out another one, you don't get it, and it's just that kind of, I think, even kind of that mindset thing where you've been able to divorce yourself from the success of the deal. I mean, you've evaluated the properties, you understand the numbers, and at the price that you're willing to offer, you believe that it'll work for you. But I'm also wondering if you can speak a little bit about having had some success. Do you believe that has raised your position amongst the area brokers, and maybe that's one of the reasons why you're seeing more deals presented?
Absolutely. It's everyone speaks about it. Everyone, for people that are new in the industry and they're looking to get in, that's one of the most common things you hear from people that are already doing it, right? You gain this momentum when you do your first deal, and it's there's totally this game of chicken and egg that goes on, right? With the lenders, with the brokers wanting to give you a deal or allow you to kind of get the best and final or get your offer accepted, because at the end of the day, everyone wants to know, can you close? What is your ability to close the deal if I grant you the contract to that, right? So absolutely, right? Getting the confidence, number one, doing the underwriting, becoming more immersed in the industry, understanding the language, the lingo, how you present yourself to brokers is tremendously important. How professional you seem. And in the beginning, it is a lot of posturing, right? So you have to kind of fake it till you make it for a while, until you've proven to brokers that haven't worked with you before that you're someone that's capable and you can do it. And if you're uncomfortable with that, that's okay too. Partner up with someone that can do that for you. Partner up with someone that can talk the talk, or maybe they're a little bit further ahead of you, right? That's one of the things that I found to be very successful for me in my multifamily career, was partnering with, I think Chris Jackson with Sharpline Equity. Chris has been a great friend and a mentor to me, and that's something that I value tremendously. And he's way further ahead than where I am today. I attribute a lot of my success to trying to add value to his life and having him kind of bring me along with some things. But yeah, getting deals helps build confidence. It helps you be able to speak with brokers with confidence as well. And I feel like in today's market, where it is very competitive, if you are new to the industry and you're trying to break in, it is certainly a lot easier, and there's less brain damage for you to go through by looking for smaller deals to get your feet wet in secondary and tertiary markets outside of maybe where you live or in major metros where you are, just because the competition is so tough. And yes, you will spend a lot of time, waste a lot of time trying to go after deals where there are people that have a lot more deals under their belt, and the brokers take them a lot more seriously than you. So you either partner up or you go outside into the boonies a little bit, and start there.
No, I think you got to get the first deal. If you're and there is something about success breeds success. Um, you mentioned about going into multiple markets now, that you've expanded your. I can't remember. Did you say 5?
It was a
Or
13 or 12, but who's counting?
okay, but just the different markets you're looking at now.
Yep.
Um, Can you talk a little bit about some of the team members when you're going to a new market? Uh, where do you guys start? Is it a broker relation, property management, boots on the ground? How do you get yourself oriented?
So we're some of this is a work in progress, and it's also well, it is a work in progress. So starting out right now, we've got 5 properties across 2 states, Texas and in Georgia. We're working on a deal right now that is in Ohio, and it's right down the road from where my partner resides in Ohio as well. That deal was found through brand new broker relationship. My partner Matt going out and saying, "Hi, I'm Matt. I'm looking for big apartments," and him hitting it off really well with the brokers there. They took him seriously, and they sent over an OM, and that's something that we've made it to best and final on. So that's one example. The other markets that we started to explore, which is certain parts of Florida and different parts of North Carolina, that we were able to leverage existing broker relationships in my Atlanta market, for example, by saying, "Hey, Bob the broker and Joe the broker, my partner and I are looking to do things in Charlotte, for example. Would you be so kind as to introduce me to your Charlotte counterpart?" And then they do that. And then you kind of build off of the Bob the broker said you were fantastic sort of thing, right? And they only know you as a warm intro versus you just picking up the phone and calling them cold. So those warm intros we've been leveraging as much as we can to start those relationships with those brokers. And part of our plan, I'll share a nugget with the listeners here and the viewers. Our plan is in these new markets, because these are new relationships with brokers. We're not really in the market yet. Some of the properties we were able to tour during a conference in Florida, for example. And so, we have very beginning stages of broker relationships, but we'll plan on making some offers on these deals. We know there will be zero chance of landing in those deals, but it helps the brokers build a relationship with them, helps us understand who we are, how we work. And then, maybe by the 3rd or 4th time, we'll be in a position where we've closed other deals, other places. So we continue to build that track record. And then we're also now a known entity with that broker for when it's something that we really, really want to go after. So that's something we're in the process of trying out, and I'll give that to the listeners as a freebie for that one. It just seems like it makes sense.
No, I think there's a lot of value to it, because I think I've been guilty of it. Is I've talked to a broker and just the deals didn't make sense to me, and didn't follow up and complete the communication. That's not a good way to go. I mean, you need to provide feedback and even better, present an offer. I mean, because even that kind of juices up the broker. I mean, they're excited because they've got something to present, and
Yeah.
at least gives
Yeah.
them a chance to get in front of the seller, or just to be recognized in the market as somebody that's bringing offers. So I think there's definitely a value on that may not be immediately recognized by the buying party, but I
And for
definitely
what it's
agree.
worth, submitting LOIs, it takes work, right? You got to underwrite the
Yeah.
deal, and heaven forbid you miss something in your underwriting, where this almost happened to me. I made a mistake in my calculations. What it was, the T12 that I got wasn't a T12, it was a T8 or
Ooh.
T3, terrible, like the T5. So in other words, when I annualized out the budget for the operating expenses and all the income, I was using inaccurate numbers. And I made my offer based on that. Talk about making rookie mistakes or learning from painful lessons. So you can bet your bottom dollar every time I get a T12, I count all the columns to make sure there are 12 of them. And as luck would have it, to your point about when all four land, well, they accepted my offer, and I was like, oh my God, I can't, because part of one of the big mistakes that you can do in our industry is retrade, right? Not close on a deal, and kind of make the buying process or experience unprofessional some way. So it would be in poor taste for me to just go, oh, I changed my mind, sort of thing. So we were able to save face and gracefully bow out of that project there. But I learned a valuable lesson of make sure you count all the columns when you get a T12.
Right. 12's more than 8. But so can you speak a little bit to where you've met your partners, as far as the team, as far as the investors and that? How have you gone about raising money or teaming up with fellow investors?
Yeah, so I'll start with partners. Partners has been an evolving experience for me. I started out, my first partner was a personal friend of mine. We're still friends today. Partnership didn't work out. We were in two different places. So you learn a lesson about making sure that your partner, and this sounds like duh, but making sure that your partner and yourself are aligned with what your visions are, what your goals are. I was really into multifamily. He was pretty much into multifamily, but also doing a lot of other things, other main job work, but not really getting the same education that I was receiving. So I was getting really excited about multifamily, and he wasn't quite there yet. That's how I got sucked into some single family stuff. So that was one partnership. Another partnership, a lot of it, some of the educational communities that I'm involved in, for example, Wheelbarrow Profits with Jake and Gino, they've been a fantastic group of mentors, and they've done a fantastic job of curating an amazing group of people. So Jake, Gino, and Josh there have built an incredible community. And from that community, meeting a bunch of like-minded, positive, ambitious, successful people, you find someone that you gel with from a personality standpoint, or maybe a values standpoint. And one thing that I've learned along the way is the best way to find partnerships that work while reducing risk. I know this is a show about insurance, so I'm going to throw that in there. Is maybe look at a deal together, right? So if you meet a bunch of people, maybe you go to a real estate meetup group and you see someone that you might feel like you have some good chemistry with. Maybe just one at a time, reach out to one of them or two of them or three of them separately, and see what it's like underwriting a deal together, right? Or looking at a deal together, and you'll get a sense real quick if it's something that you want to work with, because doing these deals, especially if you have a full-time job, it's a lot of work, and you really need a partner that complements your skill set, maybe fills in where you are lacking, and vice versa, you fill where they're lacking a little bit, but also you kind of share the same work ethic. And what I found is, there are different people that I've interacted and partnered up with, and they're at different places in their life, and that's okay. But fortunately, I've been able to find a really great partner with Matt Shields from the community here, and we've been we're totally aligned here, and it's been transformative.
That's awesome.
As far as investors go, that one's been a little different. Investors also in the community as well, right? The people are at different levels of where they want to get in their real estate career. So you can also meet people at meetup events. Some people have ambitions of becoming general partners and running their own deals. Others go to these events because they want to get involved somehow, but maybe they're comfortable with becoming a passive investor first, right? In their first one or two deals. So a lot of people that I've met over the years at different events, I just kind of save their information, and when I have a deal, I send very simple emails out. Hey, working on a deal, looks like this. Let me know if you're interested in. And then it's a one-on-one phone call with them, and talking through the parameters of it. I think having the sales background helps me with that, because I can kind of sell and explain and address any objections. But there's a variety of ways. It's just talking to people and telling them what you're doing. And I feel like it becomes easy when the passion comes out, because they see that in you. They read it in your body language, and they kind of want to be part of that.
Yeah, no, amen to that. It's even kind of like you go back to your beginning in sales with the tech, how somebody saw that you'd be good at it, but you didn't. But I'm assuming that it's that transference of belief. You must have been excited about whatever you were doing, that somebody saw that like, God, you'd be good at this.
That was it. That was exactly it. That was
Yeah.
exactly.
That's great. Hey, JP, if we could, I'd like to shift gears here for a minute. As I mentioned before, and we've hinted at throughout today's episode, by day I'm an insurance broker, and one of the things we do is we manage risk with our clients, and there's a couple of strategies that we try and look at as far as a way to manage the risk. And the first one is we ask, can we avoid the risk? If that's not possible, then we look to see if we can possibly minimize the risk. And if that's not possible, the last option we look at is, can we transfer the risk? And that is what an insurance policy is. It's a risk transfer tool. And so as of late, I've been asking my guests if they could take a look at their investment strategy, their experience, just the market, and you know, if they could identify what they consider to be the biggest risk, that's in play. And just to clarify, I'm not necessarily looking for an insurance related answer. Um, if that is the case, then so be it. But risk is clearly beyond the scope of insurance. And so, if you're willing, I'd like to ask you, JP Albano, what is the biggest risk?
So one of the biggest risks that we were unaware of that we've since become aware of is one of my properties in Texas. Small property, 28 units. I guess I'll start with the summary and then I'll go into the story. Is if you're going to get started as an investor in smaller properties, just because it's easier, right? Easier to raise money, less overwhelming than taking down a 100-unit one, whatever. Really investigate your third-party property management options thoroughly, and have a number of backups lined up. Getting into this business, I thought I had an expectation that there was going to be more passivity into this business. Passive income. Passive income is a lie, unless you're a passive investor. If you're going to be a GP, and even if you hire third-party property management, there's work to do. In my experience, I haven't run into many third-party PMs that will have the same level of care and attention to detail that I do, or you would. And so we found ourselves in a situation where we had a underperforming, when it all came down to it, property manager for our property, and was hurting our numbers. And fortunately, we were in a position where one of the partners is local to the property, so making sure that one of the partners is physically close to it, take over property management roles. And we were able, in the course of, I think, 4 weeks, to become 100% leased up and have a waiting list. Something that we were just struggling for weeks and months with a third-party PM. So part of the problem was we were having a hard time finding someone to take his role as a replacement. And then one day he called us and said, "Hey, I'm letting you guys go. I'm changing our business model." So it forced us to figure something out. And as a stopgap, we said, well, let's just take over self-management for now. And it worked out. It's been working out really well because we've been kicking butt. But we didn't expect to find ourselves in a situation where, oh my God, who are we going to find to manage it? Because at these smaller property sizes, you'll find there's a lot of single-family property managers, which is cool, but they're not really well suited for multifamily. 4 units, sure, but not 12 or 20 or 30 or 40. And then it's also too small for the bigger players. They want 50 units or 60 units and above. So there's this gray area of like 12 to 40-ish, where there may not be in your area, your market, a lot of third-party PMs. And that's critical to the success of your investment. That's an execution risk right there.
No, I tell you, you're singing in the choir. Good property management. How to operate it. I mean, without it, you end up like the seller that you bought from. You've got to have something that's keeping current with the market and keeping the spaces occupied. And I mean, time is money. I mean, I think that's the thing that I recognize most in that element, is it just a sense of urgency is just so critical to keeping things running on that. And I appreciate you.
That's right.
Sharing that.
Of course.
JP, where can the listeners go if they would like to learn more or connect with you?
Yep. So you can go to my website. It's my name, jpalbano.com. That's JP, albano.com. And on there, you can get access to information newsletters about what I'm working on. There's even an online course that I put together to help passive investors understand deals to invest in. It's built for busy people, so it'll help you understand how to underwrite deals, how to analyze deals as a passive investor to see if it's something that you want to put your hard-earned dollars to invest in and make a great return on. So I built that course that's be launching soon. But yeah, jpalbano.com is a great place to check out more information about me and the work that I'm doing.
Awesome. JP, I cannot say thanks enough for taking the time today. I've enjoyed it, learned a lot, and hope we can do it again soon.
Darren, thank you so much. I'm giving you a virtual high five.
All right. There you go. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.